Hello everyone and welcome back to the channel. My name is Smart Money Mo, and in today's video I'm going to be teaching you guys how to enter multiple times on the same market, on the same asset, and how to stack up your entries in order to double up on your profits. If you are currently struggling to reach profit targets and to maximize your profits, for example on a challenge like the FTMO, make sure you watch this whole video all the way up until the end to maximize the benefits from this video and apply it onto your daily trading. Before we get into this, guys, I quickly want to talk about the new ALQ strategy, which I am exclusively teaching in my mentorship. The strategy is an absolutely amazing strategy, and it has backtested proven results of yielding a RR of 3.4 RR and a win rate of 50%. This is a daily strategy which is used on the 5-minute time frame, and if you want results like I'm showing on screen, then there is only one place to find the teachings for this strategy. You can see it yields 19% in February, 14% in May, and 17% in April. There is so much thorough backtesting gone behind this strategy, and I'm extremely proud and confident by it. You can see the only place ALQ is taught is in the mentorship, and there are hundreds of hours of videos on this topic. There's 3 different variations, there's backtesting, there's results, there's so many different videos and guides and calls to help you with the ALQ strategy so that you can master it and you can get the results that I showed on screen over here. Lastly, here you can see some of my members from my mentorship posting their results and their profits using the ALQ strategy. So if you guys are interested in learning the strategy and getting the signals and the weekly calls and all of the other parts of my course, make sure to check the first link in the description to enter in on the mentorship. But without further ado, let's get right into today's video. Okay everyone, the way we're going to start this guide off is by going through order flow, because order flow is the method that we're going to be using in order to stack entries to enter multiple times on the same market and the same analysis. Because what we're going to do is we're going to convert one entry into multiple entries. And like I said, we're going to be doing this through order flow. And all that means is when price is heavily going in one direction and it's respecting one level of supply demand. So the first thing we need to understand is what is order flow in a market. Order flow is when we have consecutive breakup structures in one direction and we have consecutive mitigations of a level of demand or a level of supply, or I should say levels of demand and levels of supply. So if we take this chart for example, right, we can see there is constant breaks of structures towards the upside. We can see here this high was broken towards where? Towards the upside. Let's just say this is Euro USD on the 15-minute time frame. Okay, we can see constant breakup structures towards the upside. And let's just say there was a breakup structure before here, right? So what this tells us is that we are currently bullish in price action, because we can see every single time we make a new high, it gets ran through by price. Therefore, the highs are weak and the lows are strong. That means we are in a bullish market and we are respecting lows and we are breaking through highs. Very simple. This is the first thing that we need to identify in order to try and get multiple entries and identify bullish order flow, because order flow comes in 2 different manners: bearish order flow and bullish order flow. Both of those are very self-explanatory by their names, which is just either we're going up with demand zones or we're going down with supply zones. And in this case, in this diagram, we can see prices going up with demand zones. So for example, here we have a demand zone that caused price to respect this low and go through this high, and it caused price to move towards the upside. Again, we have a demand zone here. Price broke this structure, came down to this demand, respected this low, and broke through this high. Once you have identified, let me just bring this back. Once you have identified one breakup structure, one mitigation, so this mitigation of demand, a second breakup structure here, so when this high went through this previous high, this is another breakup structure, and we start to see another demand being mitigated, we can start to say we have bullish order flow. So if I was, for example, to take an entry from here, I could either go aggressive because we're starting to see the order flow, because this mitigation is mitigating a previous demand zone, right? And now that mitigation has now caused another demand zone and another break of structure, so we can start to see order flows being created towards the upside. So I can just go aggressive from here. So this would be my entry number 1. Entry SL. So I'll put a big 1 here for my first entry. That is a horrible one. Let me just get rid of that. Just get a 1 right here, actually. 1 there. Now, we put our TPs at this high, and we get our new break of structure, and we hit TP there. And then what do we have from here? We have another zone. So what do we do with this zone? We put our entry 2. As simple as that, right? But why? Why can we just enter aggressively? Because we have the previous break of structures and we have the previous mitigations telling us that price is trading in one direction through these demand zones and through these break of structures. So that's my entry 2. Then what do? I wait for the next high to get taken. Once I see this break of structure, I identify my new zone, which was this previous zone. And what we want to do is we want to continue the bullish order flow. So I take my next entry from here. I take my next entry from here, right? And then this is the last zone. So this is my third entry. So as you guys can see, entry 1, TP, entry 2, TP. Now I just entered on entry 3. After your third entry, or after about the third or fourth mitigation, you should start to be concerned for a reversal, because this isn't going to happen forever. We're not just going to be going up and up and up and up and up with order flow every time. We can expect reversals and change of characters in the market. So what do we do when we get through to this situation? So let me just say, where was entry 1? Entry 1 was here. Entry 2 was there. Entry 3 was here. At entry 3, you might want to put your TPs a bit earlier at, for example, a opposing level of supply. And then, we take TPs here. And once we see that the highs are being respected and they aren't being broken anymore, price is failing to reach and break through these highs, and we see a break of a low, that is when we know that bullish order flow has stopped and there has been a change of character in this market. And this is where we can start to trade our other strategies, like the change of character or anything like all of that good stuff. So, to summarize, the first thing you need to do is to do an analysis where you get multiple entries is identify your order flow. Whether it's bearish order flow, whether it's bullish order flow, you identify your consecutive break of structures and your consecutive mitigations. These consecutive mitigations can also be price fulfilling fair value gaps all the way through, right? So maybe in this scenario, we filled in this fair value gap. And then in the next one, we filled out a demand zone. And then here we filled out a demand zone. And then the first one, we filled out a fair value gap. So it doesn't always have to be demand zones. It can also be other forms of mitigation. But yeah, we first identify these two things to identify the order flow. Once we see the order flow, so for example, in this case, we had a break of structure here, a mitigation 1, and then break of structure here, and then mitigation 2. We can enter from here after having seen 2 break of structures, a new demand zone being formed, and a previous mitigation. We can enter from here, and that will be our first entry. And then we can wait for our new break of structure, and then we can have our second entry, and then we wait for our new break of structure, and then we get our third entry, right? So this is the way order flow works, and this is the way you're going to stack multiple entries and get closer towards your profit targets for your challenges. Now what we're going to do is we're going to move on to a real life chart example. I'm going to explain this concept through a trade that I took and that I sent to the team. So I'll see you guys in just a sec. Okay everyone, here I am on EURUSD. I'm currently on the 10-minute time frame, and what we're going to do is we're going to quickly analyze what I have on the screen, and then we're going to talk about identifying the order flow in this market, and then we're going to scale in on some entries, and we're just going to go through the whole process that we just went through on the diagrams, and we're going to do it on this real life chart example on EU. So first things first is let's analyze what we have here. I can see that price has firstly broken this structure towards the downside over here. And as we have done that, I can see we have mitigated a supply zone all the way up here. So you can see price left the supply zone with this candle and then it wicked back into it. So I'd say we have one mitigation so far. This was a bit of a weak mitigation, but is a mitigation nonetheless. Now, our next mitigated area is we have a supply zone over here. And again, price wicks back into it. A bit of a weak mitigation again, but a mitigation nonetheless. Now, the significant part here is that these two mitigations of supply don't have a strong break of structure. However, we see a strong break of structure here. Now, what we do is we mark up the supply zone that we are left with, which is right here. This supply zone is created through the mitigation of a previous level of supply, and etc, etc. So right now we could say we have order flow. The only issue is our break of structures are on the minimal side. We want to see at least 2 break of structures before we can say that there is strong order flow. So what I'm going to do is I'm going to wait to see where the price will respect this high, where this supply zone is, and I will enter if we get another order flow. Okay. Bang, right there. We get the mitigation of this supply and we get the respecting of this high. Then we can see that price breaks through this low. And what do we get from here? We get a beautiful opportunity to enter. So we could have entered from this. So this could have been entry 1. But just to stay on the safe side, we'll see that we didn't enter from this. However, I'll keep this in here for the case study of order flow, because the order flow started from there anyways. Okay, now our next zone is, for example, this zone over here. Got a break of structure. You know, it's got some inducement here as well, but that's not the focus of this topic. So what do we do here? Simply, we set our limit there, right? And we wait for the next break of structure to occur. And let me just drag this over to tell me that the order flow has continued. We have consecutive break of structures and consecutive mitigations. Now we are waiting for our next mitigation. So we'll just put our TPs here for now at the new low. And there we go, we are now tagged in. And we get our next take profit, and in turn, we get our next break of structure. So that's already 2 entries. Let's drag this along here. Now, our next zone here is a bit of a messy one. But what I will say is, looks like we have a zone right over here. Again, we have our new break of structure. And now what do? We wait for this low to be broken. And what do we do here? We set our entry and our target over here. So a bit of a smaller TP on this occasion, but it will do nonetheless. Tapped in there. And price runs for our TP again. So now we've had at least 2 consecutive entries, and maybe even a third one if we went for this one, totaling to, you know, plus maybe 6-7 RRs here. This is a quick and easy way, all within the same day, to stack these entries with order flow. Now, I haven't actually analyzed past this point, so let's actually see what happens as this order flow continues. So we have a new break of structure here, and now we're waiting for this break of structure to occur. And let's just go down a time frame to see if we do have a supply zone here, maybe 3-minute time frame. Yep, so we did have a supply zone here. So again, this is the continuation of our order flow. So we need to put a red dot here. And another one over here. There we go. And now we can set our new entry there, put our stop loss there, and our new TPs here. However, what we need to start being careful now, because if we see that this low struggles to get broken, then we might want to, reevaluate and say that maybe we should be careful on entering on the next supply zone, because eventually this has to come to an end, right? So let's watch this one. Let's actually put our TPs here this time, because this order flow has been going on for a while now, and eventually we know that there's liquidity being built up towards the top side here, and eventually it has to be taken out. So let's see with this last entry over here, which is our stop loss there, our TP, yeah, just about there at that volume gap. Let's see what happens with this entry, because this was a news entry, so this would have actually would have broken the structure as well, but we'll stay true to my word, and I said that I'll put it there. So yeah, as you can see here, we have 4 RRs here, basically 2 RRs there. So that's 6. I'll round that up to 4 just for the simplicity's sake. What is that? That was 4 plus 2 plus 4 again, so 6, 10, and 3. So 13 RRs within the space of simply 1 day. Right, this is all 1 day's worth of trading, 1 day's worth of analysis. We were able to stack entries, and with 13 RRs, you can pass your face on for FTMO. It's as simple as that. Now let's actually see here. Do we fail to break the low? No, we actually do break the low. So maybe there's even more entries to come. Do I see any clean supply zones? Let's see, 3-minute time frame. So there is a supply zone right here. Now this is where we start to get into the risky territory, because we've had more than like 4 or 5 entries now. I will keep going with this just to see how many entries we can get. Again, enter from here, and we'll put our target wherever this low gets created. So the low was created there, target goes here. Let's see what happens with this one. Ooh, I think that was another TP. It just about didn't hit our TP by what? 0.2 pips. Let's see if it eventually does. Oh wow, we're going on for a while now. Let me up the time frame a bit. Oh, not that much. Okay, eventually we don't go to our TP, but there we can go. Now what we can say is actually very important. What we can say is we got stopped out here, but what that also tells us is that the order flow has been broken. We are now no longer in a state of bearish order flow where we can get multiple entries one after the other. And now we need to start thinking about whether we can see a change of character and maybe start trading the opposite end of the market, right? Now that you guys have watched this video, you'll be easily able to find order flow. You're able to identify it onto your charts, and you'll be able to scale up on your entries and enter multiple times with the same analysis. Hope you guys found this video beneficial. Make sure to stay tuned for tomorrow's video. Thank you all very much for watching, and I'll see you in the next one.